So, friends, we are explaining how to file the income tax return. I am Vauri Sachin, and I am going to explain you how to file the income tax return. So, contents of my presentation are heads of income tax slab in India, then exemptions in the income tax, then deductions in the income tax. Then what is the ITR filing process that I am going to explain you in step by step manner. So what is tax? So tax is a compulsory responsibility of for every citizen of India. So it is compulsory to have a tax to smoothly run the nation. There are two types of the tax in India: direct tax and indirect tax. So direct tax includes the tax paid by the individual for its income, that is annually you are asserting this direct tax, whereas in indirect tax, that is includes GST or any service tax, that is comes under the income tax category. Now this uh, direct and indirect tax is also contributing lot to the treasury of nation. Okay, so there are two types of the direct tax: direct and indirect tax. So this is a I am discussing the tax slab for old tax regime. In new tax regime, it is pretty easy tax slab, but I think that it is preferable to use the tax slab old regime up till now as compared to the new tax slab. So old tax regime I am explaining. So up to 2.5 lakhs, there is no tax. From 2.5 to 5 lakhs, it is 5% tax is introduced. From 5 to 10 lakhs, 20% tax, and about 10 lakhs, 30% tax is there. For senior citizen and various citizens also I have explained, cited the uh, tax regime. So overall of that, we are having education cess 3% plus health cess of 1%. There is the standard deductions for are there for salaried and pensioners, and there is no separate slab for male and female in India. Now, what are the heads of the income? The heads of income are income from salary, income from house property, income from business, profession, income from capital gains, income from other sources. So, what is the difference between exemption and deduction? So, what is exemption and deduction? Income, if exempt from tax if it is not included in the income. Okay, like any income, if it is not included in the salary or income, then it can be considered as a exempt. Exempt income will never exceed the amount of the income. It is obvious that it shouldn't exceed the amount of the income. Various section 10 clauses are deal in the exemption. A simple example of the exemption is we are getting the uh, income from saving account interest that up to 10,000 it is exempt from the income tax. So this is example of exemption, whereas in deduction all the section 80C to 80U deals with the deduction. 80C will be I have explained there that life insurance, EPF, 80 means education loan tax. So that are comes under the deduction. So ETC, majority of the deduction is ETC. So its limit is 1,50,000. You can deduct this amount from this income. There are different types of the investment that are eligible for ETC, like life insurance premium, EPF contribution, PPF contribution, NSC investment, Sukanya Samruddhi SSA investment. ELSS saving schemes are also eligible for ETC. Senior citizen scheme, 5-year post office deposit or bank deposit, tuition fee of kids are also included there. Principal payment paid for home loan it also comes under ETC. Stamp duty and registration cost of the house also comes under the ETC. Now I am going to explain you how we can use this portal, income tax login portal. So income tax login portal, your user ID is there, user ID and password and captcha. User ID is always your PAN number, whereas password is set by you. So after inputting the user ID and password, you will get this screen. Now here you will have a tab, filing of income tax return. So you will click on that, filing on the income tax return. Then assessment year, whatever the assessment year is there. So financial year plus 1 year, that will be the assessment year. And most for salaried person, ITR 1 will be more suitable. ITR 4 is for the capital gain person. So for we are mostly salaried person are eligible for ITR 1. So you will find input like this given in the uh, this screen. Then this declaration or general instruction is given. Then your first part is general information, what is your PAN number, what is your address. So that is you have to see it is pre-filled. You can check it and whether you can correct it also, and if it is okay you can move to the next line. That is the next type is computation of income and tax. So you can compute the income and also you can get tax, so whatever there is. So in income you can have the gross income. So gross income is summation of salary plus any other capital any other income source. So that will be the gross salary. Then less after that the allowance is there. So whatever the allowance are there, so you will select the allowance. So after deducting the allowance, you can have the net salary. Then the deduction, standard deduction is there. Then whatever the other professional tax you are paying, that you have to input. So after that all this you are getting the income chargeable under section for a income tax calculation. Then you will have the uh, types of house property, any tax paid to the local authority. Okay, so then we are having the ATC there. So you will input what is the ATC, EPF, all these ATC will be there. So that ATC computation up to 1,50,000 you will input there. If any pension fund is there, ETCCC, mostly we are going to see that under section 80 1B, another 50,000 under NPS we are getting deduction. So that is important. So NPS contribution up to 50,000 can be again claimed. So you can get 1,50,000 plus 50,000 means 2 lakh deduction. Then ATD is also can be having the value over and above 1,50,000. So health, here we are having the health insurance premium. Then medical expenditure is also comes under this. Preventive health checkup is also under this. So medical cause is also covered over and above this to this deduction. So this deduction can be again increased. Interest on the home loan given, donation given to the charitable trust, ATGG. So these are these deductions in the income. Then after that we can compute the tax. So total income will become after deducting the all the from net salary to minus total deductions. Then you are getting the total income that is chargeable. On that you are getting the tax payable. Then 3% cess, health cess and education cess will be allowed there. Then after getting the your tax, then it is showing. Next is tax detail. What is the tax we have deduced? So whatever the tax is deduced from the our employer, that is comes here. So if the tax deducted by the employer is more, we will get the refund, and if the tax deposited by the employer is less, then we have to again credit the tax to the government. So here next is tax paid and verification. So you will verify tax paid and verification, and you will verify your bank account. You will declare that all the information is correct, and this way you can fill the income tax return. So here most important is that you can save the tax by ATC, means by ATCCD 1B NPS. Then you can save the tax by health uh, health health issues. So these are the various deductions, and from that we can save the tax, and you can pay the tax according to that. So it is our duty to pay correct tax. Thanks for supporting me and listening patiently this audio. I am thankful to you all. Please like and subscribe this video. Thank you all.